All right, second video of the day after a 1 month vacation. Um, I'll show you about the performance of my small cap portfolio that I've been trading. I'm not going to go into detail on the price slope method. I mean, you can see that in several different videos. It's not rocket science. I'm simply fitting a straight line to recent price data, past price data. From that straight line, I measure a trend. I go long if the trend is up, and I'm out of the stock if the trend is down. Simple. I use the FinViz Elite Screener to find good small cap stocks to trade. So you can see here's a screenshot of my screener. My criteria are US stocks only, 500 million to 5 billion market cap. I want profitable businesses. I want companies that are within 5% of the 52-week high, so things that have been going up, and stocks with a price to sales ratio of less than 5. So at some level, these are value stocks. You can see in the graphs below a few of the top performers over the past week or month. I'm tracking about 60 stocks, and right now I'm long about 30 of those. I've been long up to like 50 plus of them. I've actually been used a little bit of margin in the past, but usually I don't use a margin. So initially I was allocating $1,000 to each stock. So if I was in 30 stocks, I'd have 30,000 in the stocks, 15,000 in cash. But I've recently started doubling down on the winners. So when I have one that's going up a lot, I'll basically double my position in that. Here's about 2 months of performance data. The blue curve is my small cap portfolio. The red curve is the SPY, and the orange curve is IWM, which is the Russell 2000 small cap ETF. Since I'm trading small caps, you would think that my portfolio would track IWM, but it really doesn't. So the results here are mixed. I'm currently beating both the SPY and IWM, but last week I was below both of them. So it's kind of a volatile market. I mean, one thing you can say for sure is that this small cap portfolio is not highly correlated with the SPY or with IWM. So that's worth something in itself. It's interesting that you can be uncorrelated with these large indices and yet still be only in stocks and cash. I thought it would be interesting to look at the top performers to show you what sectors are hot. The first two stocks here, I've doubled down on them. It's Amphastar Pharmaceutical and Intrepid Potash. I think Amphastar is just a hot stock. It's been doing incredibly well lately. Really over the past year, I think it's tripled. Now, potash is used in fertilizer. As you probably know, we are in a worldwide fertilizer shortage due to the Ukraine war. And Intrepid has a large potash mine in Utah. I think Ukraine is one of the world's biggest potash providers, and they're not exporting any potash right now, to my knowledge. Two other fertilizer companies are LXU or LSB Industries and UAN or CVR Partners. I'm in two coal companies, CEIX or Consol Energy and AMR or Alpha Metallurgical Resources. Coal has been doing amazingly well for well over a year now, and yet the price to earnings ratio on these stocks is still 3, 4, 5, really low, absurdly low. I'm in a couple of oil companies. Sand Ridge is an oil and gas producer, whereas RES is called RPC Inc. They're an oil service company. AMARC is AMARC Precious Metals. It's a retailer for physical metals. VRTV is Veritiv, which is, quote, a business-to-business provider of packaging, publishing, and hygiene products. Kind of an unlikely one that I would never be on my radar, but it's been trudging steadily upward for a year, so it's nice to, I guess, again, the thought is they're probably inflation-proof, whatever they sell. SPH is Suburban Propane. So in addition to seeing the oil and gas producers doing well, you see a lot of midstream and downstream companies also doing well in this environment. Presumably, this is because they're able to pass on inflationary costs to their customers. So the last two companies are Vivo, which is Meridian Biosciences, and Next Gen Healthcare. So I don't know too much about these businesses, but I suspect that the market believes that healthcare in general will be relatively inflation proof. So anyway, it's not a real interesting video, but at least I'm showing you what I'm trading and showing you honestly how the performance has been. I think a lot of people doing trend following are looking for like the next huge 10 bagger, the rocket ship tech stock. With my value bias in my screener, I'm mainly I'm not going to find 10 baggers probably. But what I am doing is mainly finding kind of macroeconomic trends, like the fertilizer trend kind of presents itself, the coal trend, energy, inflation-proof businesses. The small caps tend to be more concentrated than large conglomerates, so you will, for your trend follower, you're probably more exposed to a big move, both up and down. But still, probably no 10 baggers among these picks. To get the 10 baggers and better, I'd probably have to look at micro caps and probably relax the constraint of only investing in profitable companies. So anyway, that's it for now. I will keep trading both of my strategies, and maybe another few weeks or a month once something interesting happens in the market, and I can see whether I think this is working or not. I'll come back and present the results. But look forward to your comments, feedback. I'll see you next time.